To a new episode 7, I believe, of the Small Account Club. I'm having major technical issues. I cannot get my camera to work with this computer, and it's been crashing. So I am moving into a new computer this weekend. So tomorrow night, Sunday Night Futures Live will be on a brand new computer, and crossing my fingers that we don't crash here today. So we're going to have to do this without seeing my ugly mug. And I'm sure nobody is going to miss seeing me. So let's get started. Let's talk about the small account. And for those who are new or watching this on the replay, this is currently being aired live, and that is going to come to an end in January. So if you want to be invited to these private live streams moving forward, use the link below, Small Account Club, and you get the invite each time we do go live and we talk about our small account. Today, we're going to do a little bit of a focus more on scanning for high probability trades. And this would require us to get long of options. Not require, I shouldn't say that. Not require, but we can have an edge over other traders. And that's the only way I would ever buy options, is only if I have an edge. Case in point, last week on episode 6 of the Small Account Club, we spoke about this stock here in particular, Align Technologies. I'm not going to spend a lot of time on the trade, what I said last week and how it played out. You can go to Thursday Night Stock Charts Live. I go into it there in detail. It's on YouTube, so go check it out at your leisure. But we did trade this. As we reviewed last week, I would probably trade it. We did. And we bought Align Technology in 2 tranches. Here on the 31st, tranche number 1. We opened a position, tranche 2. Here on this reversal day, that was the FOMC rate meeting. We added to this position near the lows of the session, and we enjoyed the rally up higher. The bet is that we would see a short covering rally on the news from the Federal Reserve. And it turns out we were right. So you saw a rally on Thursday. I booked profits here. I didn't stay in the entire trade. So I do not want to mislead anybody. I did not stick around for the entire trade. We made $2.30 per contract. That's pretty respectable for a stock that's getting beaten up. We had a short covering rally. We saw a profit. We booked it. We moved to the sidelines. And the reason why we got involved with it is because we had an edge. We had RSI at that point in time with an 11 handle. This is a high quality company. And they were taking it out to the woodshed. Nobody wanted it. And we used our contrarian trading style to get long. And it's a profitable trade. It's in the rearview mirror. Actually, we still have a trade on here. We not only did we buy the call options, we also sold premium. We sold puts. And then on this rally here, on the 2nd, I sold calls. So now we have a strangle. So we're getting paid for time decay. So that trade is still on. So we have 2 different types of trades. We're still involved here. So that is an extreme oversold trade. Now, this week, what I want to talk about is this. And not an extreme trade, but a high probability trade. And we're going to use, I think we're going to use, let's go with the weekly chart first. And we're going to be using TrendSpider. And folks, I just checked in. Normally I say, take advantage of my 35% discount code. I went into incognito window because they hide this from me, which is okay. I understand it's business. But they're having 82% discount off of their subscription with a 7-day free trial offer. Use the link below. Don't use my discount code. Use the link below, though. And that way you get 82% off. Okay, so here's an example of what I like to call a squeeze. And sometimes it's referred to as the TTM Squeeze. That's a copyright protected name. On TrendSpider, it's called something else, but we're going to run a scan here for weekly charts of potential squeezes. And basically what it is a squeeze identifying, or scan identifying, when you have the Bollinger Bands in black inside the Keltner Channels. That's not supposed to be. And when it does occur, it sets up for a major, major directional play that many people aren't paying attention to. The question is, which direction can it take, higher or lower? We don't know that yet. So we rely upon breakouts, breakdowns, and our alerts that we set up on TrendSpider. So let's go to the scan. Let's go first to these are all my scans here. Where is it? What happened to my squeeze? Oh, here it is. Okay, right in front of my face. Okay, so we're going to change this from daily to weekly. And don't worry, if you sign up for TrendSpider, I'll send you this code for free so you have it automatically. So now we're going to scan the S&P 500. And you can see it's coming up with a whole host of names that we could look to trade for big, big breakout or breakdown trades. So I'm going to go with a couple of the most familiar to me, first of which is Broadcom. Amazon's on here. We spoke about ABBV last week, and that's a breakdown trade. That's up in front of you now. So this is a short. You could see here that we had broken down last week below the lower band of support, rallied back in an effort to try to recapture. ABB is probably going to fail and break to new lower lows. So going into the new trading week, we see a high probability to the short side for ABV. We spoke about this one last week a little bit as well. So let's bring up, Amazon had a very, very good week last week. NVIDIA's on here. Netflix is on here. Let's check out Netflix first. So you can see that Netflix, and we were long of this. Actually, we were short. We put profits on that. We got out of the way. Thank God. We have the Bollinger Bands in black, trading within the Keltner Channels in green. Generally, you're not supposed to be there. But if you look back in prior times, this occurred back here between March and May. It was a long consolidation, a lot of compression here, a lot of buyers and sellers saying, we're either taking this thing down or we're taking it up. Sure enough, they consolidated and broke it out, and it went on for a huge, huge rally. We're looking at the same thing again. So as you proceed into the new trading week, we'll be sending out alerts on these names because these are the names that are out there that have the greatest potential for a massive short covering rally, also institutional accumulation. So unlike ABBV, this is still a squeeze potential, however, going in the opposite direction. ABBV is a short. Netflix is setting up for a long. What we're looking for here is a breakout on a weekly time frame, and we could look to get long of Netflix, or we could simply just sell puts. And before I move on, I want to revisit our portfolio. This time last week we were below 21,000, and for those that are new to the new account club, I deposited $20,000 into this account, opened it up on August the 11th of this year. So far, since August, we're up over 6.33%. So doing pretty well. And we have a trade on at current, which is performing well. And we plan on booking profits within the next week or two on it. So if you're not currently a member of the Contrarian Trader, you have a small account, you want to build it, sign up. I'm building one along with my large account. So you're not going to be alone. 14-day free trial offer. And if you sign up for the silver and gold level membership, you get TrendSpider free. Let's move on. So also on this scan, We had names like Amazon. We had ExxonMobil. That's a good one. But we're going to stick with tech right now because tech is in fuego. Let's go to Amazon. Now, Amazon, let's clear off all these. Amazon, you can see here, is, or has, I should say, broken out of a downtrend channel. And what I want to see this coming week is a retracement. Remember, the equity markets left the week out pretty extended. We had a massive, massive rally last week. And I believe that we're going to get a pullback, not a crash, nothing like that, but a pullback this week, so much so that I opened up a short hedge on the triple Qs. Now I'll take that hedge off once we hit support. I'm not betting on a big bearish bet here like we did over a month ago, and we made money to the short side. So our strategy here on Amazon is that if we get a pullback to 136.05, what we could do is either A, buy the common stock, buy a call spread. That's the purchase of a deep in the money call option, simultaneously selling a deep out of the money call option. Or we could just simply sell puts and generate cash flow. So many different ways we could trade Amazon going into the new trading week with the scans that we just ran on TrendSpider. Touch, bounce, we're good to go. Now we set it and forget it. If we do not pull back and do a retest here, I will not be trading Amazon. We use a rules-based approach. If this, then that. If Amazon touches this support level, then we will execute on a trade. Not before that. Now, going back to the scan, sticking with tech here for a minute, probably go for a half hour today. I'm going to keep this brief. I do need to move into my new computer. Let's stick with tech for a moment. Let's go to AVGO. This is a big mover. And this is looking really, really good. Really, really good. You can see that we broke out last week on a weekly time frame. We had the Bollinger Bands in black, trading with inside the Keltner Channels in green, setting up for a major, major bull run here on Broadcom. You can see the last time this occurred was back here in May, and we broke out and we had a rip your face off rally for the shorts that were trying to bet against Broadcom. We are not in that camp. We are bullish on Broadcom. We think that the shares are moving up higher. I will be sending out trade alerts to members, and we send them out through our Slack forum here. Here's our small account forum. We put our alerts in here. We do our little BS sessions in here. Option selling trades, we put the trades in here. These are the actual executions out of my brokerage account. Moving on, the next chart that we like going into the new trading week, let's move this beyond tech. Let's move into energy. Now, I really don't like the price action of oil last week. And oil is, or I should say, the energy stocks are heavily correlated to the price of oil. Now, energy did good on Friday, or the energy stocks. Oil did not. So I'm torn on the energy names right now. Oh, Newmont Mining's on here. We're going to go over Newmont Mining. That's a gold mining stock. Let's take a look at XOM. That is also having a Bollinger Band squeeze. But as I mentioned earlier, this can go in both directions. You can either break out or break down. Now, ExxonMobil, again, you can see that the Bollinger Bands are inside the Keltner Channels, not supposed to be. So you either have shorts that are accumulating or bulls that are accumulating here. It looks as though you have a good risk-reward entry point on ExxonMobil if you're bullish. If you're bearish on ExxonMobil, you need to wait for a break below this support level. not before when I enter this trade to the short side. And we're not 100% confident which direction ExxonMobil is going to go. If oil breaks down further, the probability of Exxon breaking down is very high. This is the usage of knowing your correlations when you're trying to make a trade, not simply looking at a chart and trying to divine whether or not it's going to go up or go down. You need to know what trades inversely of a stock or a commodity, and also what is correlated. Oil and ExxonMobil are very highly correlated. Let's fix that. This is my OCD kicking in here. And we're good here. So our alert is set here, and we can pull back. We can come over here, and there they are. All our alerts are set. I sent out the wrong link. No wonder why there's only a few people here. You got to be kidding me. What a train wreck. Let me pop this link into the okay. All right, that guy there in the photo, that is not a good producer. Not a good producer at all. Okay, so ExxonMobil looking good. You could see that the week of October the 23rd, we broke support on Exxon. So if oil gives way, it's a very strong probability, not a possibility, but a probability that Exxon is going to break down, not out, unlike Netflix, unlike the other names that we've gone over so far, with the exception of ABBV, which I think is going to break to the downside. Now, Oxy is also on this squeeze list. That's a Warren Buffett-owned stock. That doesn't mean the stock can't go down. So we'll take a look at that one. OXY, the symbol. And this is in a very tight wedge formation. Again, the Bollinger Bands in black they have been inside these Keltner channels for quite a while. Very unusual. This is a huge, huge consolidation. Setting up for a potential multi-month breakout on Oxy. You can see the last time we broke out of one of these formations, Bollinger Bands inside the Keltner channels, was back in January of 2022. It broke out with a closing price the week of January the 3rd of 2022, 29.15. It rallied all the way up to $74.05 before pulling back and then moving on to higher highs and then falling into this consolidation. So Occidental looking very good, but this is more of a trade. You'll want to see whether or not it breaks out or breaks down. The probability, again, you need to watch out for oil. If oil breaks down, this could break in the wrong direction. If oil rebounds and breaks out, well, then you could see a rally in Occidental and vice versa. And BV is Bollinger Band squeeze. Since this is a very long-term consolidation, we're going to make this for 60 days. And we're also going to set up an alert. We want to know if this breaks down. And we really don't care. We're opportunists. Right? So we don't care if we have to go short or we go long. It doesn't matter. As long as the setup is in our favor, as long as we have an edge, we'll trade in either direction. Folks, if you're just joining in, we're going to be going live tomorrow night, Sunday Night Futures Live, 6 p.m. Eastern Standard Time. There's a link below. You can join to get alerted about a half hour, 45 minutes prior to us going live. And if you are interested in technical analysis, I have a 5-part video tutorial, my top 5 favorite candlestick patterns, link below. It's free. If you join up there, you'll get alerted when we go live on Sunday nights and on Thursday nights. It's free. And we go over the futures action. And there we go. So we're setting up for next week. This is all we're doing. Maybe this won't fire off next week. Maybe it fires off next month. We're good to go here. We've done our homework. Let's see what else is out there. I mentioned earlier that I like the mining stocks. And as a matter of fact, we added to positions last week for the first time on GDXJ. Those are the junior miners. For the first time in almost a year, we did put on a bull position on NUGT. That's a leveraged ETF of the senior miners the week before last. And we added more puts, which is a bullish bet. Yesterday, we sold the puts. We did not buy the puts. We are the casino and not the gambler. So Newmont Mining looks awesome. I got to tell you, this is what I like to call a Pimp Mac Daddy of setups. We are at the lower band of a trading range. We do not have our moving averages stacked. What does that mean? Well, you'll note that this is the 5-period moving average in red, 8-period moving average in yellow, 21-period moving average in green. In a different color green, we have, this is the 54. Oh, this is also the 21. What's up here? 34. So what we want, we can nibble here. We can open up a long position on Newmont because I do believe that it is going up a lot higher. Now, do we want to go all in? No, we never want to go all in on our first tranche of buying. We want to be very, very deliberate. We want to buy on strength. And you're saying, well, that's stupid. That's stupid because all you're doing is that you are paying more for the stock. Yes, but I'm paying more for the stock for the probability of being right. I am rewarding myself because our prior decision was accurate. I'm now willing to put more risk on because the probability of my directional bet being right is growing exponentially. So if Newmont breaks down this coming week, which I tend to doubt, but it can happen, of course, I will not be a buyer because my edge is gone. What I'm looking at here is, where's my drawing tool? I'm on a different version of TrendSpider today. I don't think they give me a drawing tool here. Is a breakout last week. Even though we closed down on the week, we still broke out in time. It's called a breakout in time. We basically just consolidated sideways. This is a very, very tight consolidation here on Newmont Mining. So what do I want to know? I want to know when we put in new weekly higher highs. We don't want any sensitivity. All we care about is a close above resistance. And this is one where we would probably use a call spread. And I'm not talking about a call spread going out 5 days, 10 days, 30 days. I'm talking about a call spread, the purchase of a call spread going out over a year. Right now, we have trades on in natural gas and in the GLD, which is the electronic version of gold. So we put those trades on going out on nat gas over 150 days and on GLD going out over a year. So we're very bullish here longer term. That's the bet. That's the shot here, as I like to say, on Newmont Mining. I would be a buyer of the call options using a call hedge. Basically, again, the purchase of a deep in the money call option and the simultaneous sale of a deep out of the money option. Why do we do that? Well, we do that because buying options is not a risk-free event. So what we want to do is that we want to take advantage of our edge here, which is the fact that we have a very nice consolidation on Newmont mining. That, however, is that we have time decay on those options. How do we mute that time decay? Well, we simultaneously sell a deep out of the money option. You may be saying, well, doesn't that limit your upside on the stock? Yes, it does, but it's so far out of the money, we'll still make a poop ton worth of money on this trade. So it helps finance the trade. It's the wise thing to do. That's the shot on Newmont mining going into the new trading week. We're looking for a new weekly higher high, and we will be in on the trade. Let's do one more. How much time do we have here? 4 minutes. That works. Let's look for something that's in a different sector. Nucor, that's a steel stock. And this is a sector that is interesting to me because commodities are beginning to build a base. We spoke about this last Sunday on Sunday Night Futures Live, that the commodities complex is beginning to firm up. Like names like copper, not yet, but names like aluminum, names like steel, beginning to firm up along with gold, silver, platinum, palladium. If you're hearing that noise, my apologies. That is my ice water in my Yeti, which I happen to love. So Nucor. Here are Bollinger Bands inside of the Keltner Channels. Black Bollingers, green Keltners. This is setting up for a major bull run. Very, very nice. Now, I'm not as bullish here on Nucor as I am on NEM. The reason is that Nucor deals in industrial metals. We're seeing GDP come in by the Atlanta Federal Reserve, the Atlanta Federal Reserve, come in much lower than the last GDP read. So the question then becomes, who needs steel? So I'm not as bullish here. And don't forget, this could also fire to the downside as well. So what we may be seeing here is a counter trend rally, and we could see a resumption of the downtrend. So just because these Bollingers are within the Keltner channels does not necessarily mean that it is a bullish bet. It may just be a bearish bet. But I don't think so here. I think that we have such a long-term consolidation, and we've been respecting these levels for so long. And volume last week actually picked up to the upside. I'm actually more constructive on this trade than I am pessimistic. Let's do one more. We have a minute to go. Let's see if we can find a goodie. Let's do a daily view. Let's go to a daily squeeze, see what fires off. We'll just do one here. And if you get any value, please leave a comment below. I know my email list, I sent out the wrong link. I apologize. Thank you, Gabe, for bringing that to my attention. And again, if you sign up for TrendSpider, again, use the link below. They're doing 82% off. You're not going to get any better than that. So use the link below. Don't use my discount code. Just head on over to their website, and I'll send you the script if you want it on how to run these scans. So let's run it. Okay. So this is a daily scan now of potential squeezes. Now, let's scroll through here. Let's see what looks interesting. BXP, I think that's Boston Properties. Yeah, that's beaten up. I'm looking for dividend yielders. BXP. See what kind of a yield we have here. This is for my long-term portfolio. Yeah, yielding over 6.5%. I mean, that's really, really nice. But just keep in mind, this is office REITs. This is not an area that I would necessarily want to invest in right now. I think there's a lot of problems in this sector, and I would not be a buyer. And at a PE of 14, that's pretty expensive to me for a REIT. So I'm not a buyer here. If anything, I would be looking for a short. I don't think it's going to happen until we rally up and into these moving averages. We could head all the way up into the 70s before I'd want to look to short this. So we're going to pass on this one. What else are we interested in here? Domino's Pizza. Now is a good stock. Very, very good stock. Now, here you have, again, let's minimize this, maximize the chart, and you can see that the Bollinger Bands in black on a daily time frame now, not a weekly time frame, are within the Keltner Channels. There's more upside to be had here, even though we had a major, major rally on Friday. Excuse me, on the week. This is actually, I thought I changed this to a daily chart. Yeah, you don't want to do this now. Wait for a retracement. This is now a daily chart. Wait for a pullback, perhaps down to 580 per share. You can easily see that we closed out the day on Friday at 606. And clearly with a stock that's trading at $600 per share, I'm not going to be buying the common stock here. I'd rather just buy the options on any pullback and get long vis-a-vis a call spread. See, somebody put a comment in here. Is the discount on TrendSpider because Discord seems to be platform of many? Is the discount on TrendSpider because Discord? I'm not sure the question, Gabe. Sorry about that. I'm a member of that Discord community. I don't go in there often, to be honest with you. I'm not a huge chat guy in those rooms. I hate the noise. So I'm not sure what the Discord group says, to be honest with you. But I do know that if you're a member, go to the incognito window and get yourself set up in incognito window. All right. So that is it, folks. Don't forget, join us on Sunday night for Sunday Night Futures Live, 6 p.m. Eastern Standard Time. Use the link below. Any one of those links will get you an invite reminder to your inbox, or just simply hit the notification bell here on YouTube. Like, subscribe, you know the deal. And if you want to be invited with the accurate link next time to our private live stream, which begins in January of 24, please use the link below, Small Account Club. And again, we had a very good week last week. We are back above 21,000 on this account. Since August the 11th, we are up over 6.33%. We plan on building out this account even bigger. So check in with us. We'll help you build your account as well. And I will talk to you soon. Enjoy your Saturday evening. And everyone, I will talk to you on Sunday night. I hope. Be well.